All right. Hey, good afternoon, everyone. It is Tuesday afternoon, the first day after a long trading week and after the onslaught of data that we got on Friday. And if you remember Friday, the report was bearish for corn, bearish for beans. Spent a lot of time on the video Friday going through the balance sheet and kind of trying to walk through what the ramifications are to those crops moving forward. So if you have time, go back and look at that video and really try to understand just how bearish those balance sheets could get unless we have some sort of a bullish catalyst. So we had hoped that traders would digest the information and that we would get somewhat of a bullish reaction to a bearish report. And that's how the day started, with corn up 4 or 5 and beans up 10 or 11. But then as the day went on, we just gave way to more selling, and we did a lot of chart damage, in my opinion. So let's just jump in and look. I'm going to go wheat and then beans and then corn so you can see exactly what it is that we're working on. Now, first thing that should jump out at you is this little trend line here that had been established, and we broke out the bottom side of it. That's a definitive break, something that we don't like to see at all. And it's also happening in a new completed wave count into the beginning of a wave 5, which is moving lower. Which, hey, this is a good thing because that means that it's the last wave of the sequence. But it's also a bad thing because it's a new move. This low here was violated today, and we tied it on a closing basis. We actually have a new low close for the whole move from the summer high. And so I don't think we have any choice but to get in here and get real defensive on new crop wheat. So because I know that profitability levels are rapidly approaching, and so we don't want to take excessive risk here. So what I want to do, and what we did do today for people, is move into a $6 long put with a 650 short call. And it's so hard to sell a market that is this far oversold, and I completely understand that, and understand this is not a speculative recommendation or a speculative trade at all. What I'm doing is saying, hey, this move should have materialized into something bigger, and it didn't. That tells us that something else is going on, and any kind of a rally is just getting sold. So let's just be prudent and put a floor in place so that the bottom doesn't just drop out from under us, and we're all of a sudden having to sell wheat at below break even, right? So here we are. What does a put do for us? I'm going to draw this into a rectangle. A 650 short call means, here's 650. 650 short call means that you are sold, and a $6 short put means that you are covered. So if the price of wheat trades between now and the end of June, if it stays between this range, you will get the benefit of whatever it's trading at. Okay, so if it's trading at 620 at the end of June, you'll get 620 for your wheat. If it's trading $7, you'll get 650 for your wheat. If it's trading $4, you'll get $6 for your wheat. So we've created a window here for ourselves. Now, what happens if this is a false breakout, we break out the bottom, we reverse it and come back on up higher? That's fine. You can see where we're going to cover those calls, right? You can see it right here on the chart. It's super simple. Somewhere right in here, we're going to come back and say, hey, we want to buy back in those 650 short calls, or we want to buy 680 or $7 calls on top of this in order to open up our upside in case we do get the rally that we had been looking for. But what's got us a little bit concerned today is, not in addition to breaking out the bottom side of this trend line, we broke the bottom of this line here, which is telling us that this 13 was no good and we're headed lower. And so when you rub a Fibonacci or run a Fibonacci extension off of this peak here, which is the retracement here, and you extend it out, you're looking at a low somewhere between 518 and 480 for the July wheat, with the hope of some support at 580 or 560. So you've got Fibonacci targets that are down here at or below our break even for our wheat crop. So we want to be really careful and quick to defend that and protect it. So that's why we're taking that move. If you haven't taken that move yet, I highly, highly encourage it. It is not the end of the world. And I understand completely if you are fighting this mentally, saying, no, 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 I don't want to sell this low. Understand this isn't, we're not selling this because we love the idea of selling it. We're selling it because we know where your break evens are and we're trying to defend it. I wish we were sold from higher levels. We're not, so we need to be smart about what we do and not let this just erode further. If we break up higher, awesome. We'll defend higher prices with options and let the market come back to us. But just remember, if you're sitting on unpriced bushels, your risk is down, and the risk here is significant because the market is shrugging off good news and continuing lower. So, and the last thing I'll say is that this is a bearish engulfing day and something that could accelerate to the downside. Now, what about corn? Let's look at what corn did. Here is old crop corn. This is March. You can see we broke out of the 1.382 retracement of the big move from up here, okay? And that's significant because of where it counts down to. You can see the next level is 418, and below that we're all the way down at 350 or below on old crop corn. I'm not saying that's where we're going. I'm saying that that's where the risk is lying. And everything about these counts is telling us that the downside is real and the downside should not be ignored. And what does it take to get us to reevaluate that position? It really takes a close back up above this area up in here. So as far as old crop corn goes, most of you are priced out of old crop corn. So I'm not overly concerned about it. Definitely not interested in rushing out and buying it. I'm more worried about managing new crop. But if you're still sitting with bushels in a bin and you're hoping for a reownership or opportunity, or you're hoping for an opportunity to sell it higher, I don't know if we'll get it, right? So I want to be real quick to sell it and put calls back on it if we have to, because if we do catch a rally, that's great. Let's talk about carry for just a minute. If you have bushels in a bin and you're carrying it, this is just a quick little spreadsheet that we built here the other day of corn. At 450 corn, it doesn't matter what your quantity is. This is all per bushel. If it costs you 4 cents a month to store it, plus you have an interest rate of 7.5%, that total cost of carry is 6.8 cents. With a 19-cent carry from March to July, you are sitting, what this is telling you is that the net result of that, to carry your bushels to July, your basis has to improve by at least 18 cents a bushel. And so it might happen, it could happen, but you got to look at the big balance sheet picture and recognize that we're going from a 2.1, 2.2 billion bushel carryout to something bigger than that coming forward. So end users and buyers, in my opinion, are likely to sit back and slow play their buying needs because they know a big crop is coming and that they really don't have to worry about an undersupplied situation because bushels are plenty. So the odds of a big rally aren't there without a major catalyst. So I think we have more downside to come. We're closer to trading with a 3 in front of it than we are a 5 at this point, and I think that we could continue to leak lower. New crop doesn't do anything to help bolster this opinion here at all. We've just kind of fallen out of bed. I'm really glad that we got hedges on through here when we did. We had put some calls on and we closed those calls today just saying, hey, enough proof is now in store that we need to get rid of those calls and not just sit there and eat time decay. And the reason we did that, here's your report day Friday. We thought, well, as long as we stay above this low right here, we'll hold the calls because we could reverse from there. That's just not reality. Corn is just kind of in a free fall here, and I don't see any end in sight. Yes, we're oversold. Yes, the funds are short. Yes, it could bottom at any time, but I don't think that day is today, and I would certainly expect this low to give way here as well. So our strategy here is to hold short positions, and then if we do end up with a reason to buy it, or when we do get one, we'll buy calls at the appropriate level to adjust that delta to get going. So remember, it's not an event. Just because we're sold doesn't mean that it's that we don't have to that we can't make new adjustments to a position. It's just where we're trading today. Now, what about beans? Well, let's look at old crop beans. Surely they're bullish, right? Because Brazil burnt up and their crop size is collapsing. A lot of analysts have been in the 130 to 145 range. I think Conab and the USDA are between 152 and 162, somewhere in there. And so bottom line is that's an awful lot of bushels of beans. Remember, 100 million metric tons is 3 billion bushels of beans. And 160 is 5 billion bushels of beans. So that's an awful lot of beans to come into market, and that is coming off of a huge crop for us as well. So where do beans count to? Well, if I zoom this out and we look at the whole picture and run a retracement level from over here, old crop beans can count all the way down to between 1080 and 1120. And if things get really exuberant to the downside, 950 beans is not out of the question technically. So do we want to be hedged? I think it's super simple. You need to be sold and hedged below this 1282 level. And if we climb back up above that, then we'll rethink our position. But below that level, what is the point of holding them? So whether you buy a put or sell futures, whatever you want to do, there's no reason to be on the long side here. We had hoped that we'd get a little bit of a bump up out of here, and off we go. What negates this whole theory is that if we come in here tonight and we just start buying it and we're up and out of here immediately, and then we can look back and say, man, we got bearish at the bottom. And maybe we are, but I think we still have to fight it and go ahead and sell it and manage and defend higher prices if and when we get back up above these levels. Well, what about new crop beans? Surely they look better, right? And the answer is no, they don't. In fact, I'm not so sure they don't look worse. Today we have a bearish engulfing day, or a bearish engulfing shadow, which is a sell signal. We're consolidating right on top of the 61.8% retracement of the May to June to July rally. We're sitting on top of that, and if we break it on a closing basis, where do we go? I think we come all the way down to the 1130 level, possibly as low as the 1080 to $11 level to test that. And if we get exuberant, if this low over here does not hold, then we can easily come test levels down into the mid 10s and mid to high 10s. Is there enough bearish fodder out there? Yeah, absolutely. Beans, we have a lot of them. There's a lot of them in the marketplace. Demand doesn't seem to be all that great, and so we need a story to move these grain markets off of the sell signal, because otherwise I think we're just going to sell it and not worry about it. So I recommend being hedged. I think hedge is the only place to be. And again, if we have to defend higher prices, awesome. We'll love fighting that problem. But for now, our risk is down, and we need to be very aware of it. All right, that's 13 minutes. It's a long video today. Apologize for that. And again, we don't like selling these markets either. We want them we want to be able to tell you something different, but we can't because the algorithm is short and getting shorter, not longer. So remember, there is risk trading futures and options. You should only do so in light of your own financial condition. If you have questions, comments, concerns, please reach out to us. We will do everything we can to help you get positioned the way you want to be positioned. I hope you guys have a great night. We'll be back with you probably tomorrow, if not for sure Thursday and Friday. Have a great day. See you later.